Hello everybody. Well, thought I'd make a video. This is not a great way to start a video, but I have very little new to say, which is why I'm making a video, because at least gives me something to talk to. But the thing is that we just can't seem to find a direction. This is the 1 minute bar chart on the ES. As you can see, we just sort of meander around doing not much of anything. The market opened, we went roaring higher, went all the way back down, and went up and down and up and down and up and down and up. So boring. 1 minute chart, just not going anywhere. Incidentally, I've taken a page out of my Tasty Trade knowledge book, and I'm recording this with a small screen because it turns out to be easier to read when you view it. So just saying. Anyway, if I go to this scale, like a 4-hour scale, things are a little more clear, although not much less frustrating. You can see here the bottom way back on October 13th, an infamous day. And more importantly, you can see these major Fibonacci levels here and up here. And we're right in the middle of them, which is probably why it's just so incredibly frustrating lately. It's quite plain that all this was a successful effort to build a base. All this bang, bang, bang around 3,800. The last bang was down here, and then it was off to the races. Whoosh, 200 points up. But as it is now, we're just kind of in a no man's land right here. And if we go back even farther, let's go back much farther to the weekly, you can see that, frankly, the fun, jolly part of this bear market ended way back in mid-June. Because, I mean, you can see this was the lifetime high. Bang. I'm doing a lot of sound effects today. Bang, bang, bang. And even though I know that October 13 was lower than June 16, but you know what? June 16 was when things were golden, because volatility was increasing, things were falling to pieces. And this event here, this 2-month counter trend rally, basically reinfused people with lots and lots of hope about stocks. And in a queer way, this was nominally a bottom, but the psychological bottom was reached kind of in late September. And this is, even though this is only a portion of all this, it has been a tremendous rise. So as it is now, we are in the middle of these two major levels. We had been successfully getting to this level, then this level, and this level, but then it stopped. And now we're in this uptrend. So that's the big question. You know, when I look at zero hedge, which, as I often say, people always used to say, we're not going to get a bear market till zero hedge is bullish. Well, my friends, that happened last year. Zero hedge is bullish, 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 exclamation mark. I mean, if I read one of their premium articles there, it strikes the fear of God in me, because my goodness, they're not only bullish, but they've got some pretty compelling arguments as to why. So I'll say it again, zero hedge is a bullish site. So there you go, there's your sea change. And so it's disturbing. And they make it quite clear that, the bear market is over and that we're off to a very up 2023. I don't know. I've definitely been dialing back, as you know. I entered a few new positions today. I'm at 1/3 of my portfolio's cash, which is still huge. So not aggressive at all. Let's look at a couple of other things. The NQ, the NASDAQ, has been generally stronger. It was green today as opposed to the ES, which was red. Still a pretty tough read. The one thing I will note, which is a little handy right now, is that the NQ itself, as opposed to being in a no man's land, it's actually right here. It's right at this 50% level. I think it's 50%. Let me lean in closer. Yeah, that's 50%. So if you go back to the weekly like so, here was the bottom, the COVID crash bottom. Here's the tippity top, and we got as low as, in fact, this is very beautiful actually, we got just nailed it right there, 61.8%. And now we're nailing it at the 50%. So what your old long-suffering friend Tim wants to see, of course, is to turn away from this. And what would that take? I don't know. You know, a nuclear assault on Ukraine or lots and lots of bad earnings. We're only a little bit into the earnings season here, but it certainly hasn't done much damage yet. You know, if you look at the earnings so far, I mean, I was noticing like United Airlines, that's the big earnings this evening, and not exactly suffering. I have no position, so I'm not weeping over this. I'm just noting that it's not like, oh my God, look at all the disasters out there. You know, you look at Morgan Stanley today, for example. They had a very strong day, whereas Goldman Sachs, not so strong. Anyway, let's try to wrap this up a little bit. As far as volatility goes, this has been smushed to smithereens, as you can quite plainly see, in a very short amount of time. Let's go to the 4-hour on this. You know, we've just been steadily eroding this. You go back to May, which, you know, May and June, that was kind of there's like 6 weeks of gloriousness for the bears. We went from almost 40. We're way up in the upper 30s, smashed down to the teens. Just plain sad. And in particular, the last kind of life we had was, of course, October 13, which, funny enough, you know, and this is the point I was making earlier, this was lower than back in the springtime, even though October 13 was nominally lower in the S&P. But the bears, basically bear life has sucked since October 13. And it has just been grinding and grinding and grinding and grinding away. And it's reached such a level now that, as you see, there's a lot of infighting going on my beloved slope. So that's where things stand. Earnings, we've got, you know, hundreds and hundreds of major reports to go. It's way too early to call, you know, kind of the general disposition. And the first Fed meeting of the year is not until, I think, February 1st. So it's all about earnings right now. Okay, well, today might as well have been the 4th day of MLK weekend, because there was barely any. My portfolios went up a little, but it was just so not worth it. I was focused on slope talk instead because, you know, trading's become a bore again. Gotta tell you. But I'm having fun with slope talk, and I appreciate the feedback. So that's where things stand, and I will see you later. Thanks for listening.